Etienne, thanks very much for joining us. It would be good to get a sense, I suppose, in terms of the alternative lending side, what you're seeing when we look at the debt gap, and I guess, does that create more opportunity for you especially?
Right now, it's the market is extremely challenging from a lender's perspective. Obviously, lenders are behaving rather defensive with regards to lend into new assets. So what we're seeing at the moment is senior banks partially withdrawing from the markets, due to higher capital requirements, and that obviously opens up a high funding gap, which is in need of, capital providers that can provide flexible financing solutions across the capital stack. And what we've seen in the markets in terms of capital movement is basically fundraising strategies or credit strategies that are fundraising for two different types of strategies. The first being rather a conservative debt strategy that is rather benefiting from higher base rates, providing senior or maybe even whole loans to borrowers. The other ones being rather flexible capital providers that can finance across the capital stack from senior financing up to mezzanine or even pref equity financing solutions. And in our case, for example, we are currently in fundraising stage for our new mandate. Probably we are in between. So on the one hand, we want to rather be conservative in such a market environment where we provide senior-focused loans, but also whole loans, but selectively also mezzanine financing if the sponsor and the collateral fits to us. And obviously, we want to benefit from a market where the financing or lenders are behaving sluggish, where financing markets are slow, where we can provide flexible solution in an efficient manner, I think that's about it. Obviously, on the lending side, what has changed is that we're now facing a different world, where lenders are way more disciplined and cautious in their underwriting when providing loans, and the same applies, for banks, but also alternative lenders. So, to answer your question, yes, there is a funding gap, but at the same time, lenders are behaving more cautious when lending into several sectors.
And Etienne, is there anything in terms of when we're looking at the sectors, those that are preferred in terms of you as a lender? Does that match what's happening on the equity side of the business? How do you see that?
I think as a lender, you have to have a good view on what are the fundamental changes right now that we're seeing, being it remote working, being it technological changes, but also the entire discussion about the green transition. So you obviously need to have a good view on what transition you're facing, and lend into assets where you see a clear liquidity for this product and where you see a clear lease-up potential during the next years. You do not want to lend into an asset where the fundamental change is not reflected in the business plan. You obviously need to have this kind of reversionary potential in a time where we're facing ongoing yield shift, where values are anticipated to fall further. So that's very crucial from a lender's perspective in terms of sectors and those sectors you want to be allocated in.
Great, thanks very much for joining us, Etienne.